All right, let's bring in our next guest analyst, Robin Cross from StoneX. I believe he's in Chicago, and he wants to talk about lumber. What's up, Robin?
Good morning, Scott. Thanks for having me, bud. Well, first things first, we had a little breaking news this morning. We had housing starts and building permits come out, and I'll give you those figures. Housing starts came out at down 4.1% at 1.6 million. Building permits came out up less than 1%, 0.7% at 1.9 million, which what's interesting about that latter figure is that, you're pretty close to the levels we were at before we had the 2008 housing disaster. So we're getting back up there, and just to kind of dissect those numbers, starts are down. Obviously, it's weather related. It's kind of been back and forth. We're in the middle of winter, so I totally expected it to be down. Building permits, a lot of those don't necessarily come to fruition, and especially with the high price of lumber. So the jury's still out on that yet, and I'm going to watch it. So let's go over prices right now. So March is trading, that's your lead month, at 12.90.40, limit down. That's down 30 on the day, 74 trades. You got May coming in, which is soon to be your lead with the upcoming March expiration. That's sitting at 1191.70, down 30 over there with only 53 trades. The lumber market really remains extremely volatile. Since January 19th to today, the market has had, no joke, 22 limit moves, both up and down, in 23 days. Counting today, you could add one more to that tally. On January 19th, we traded from a high of 1311 all the way down to 900, a loss of 411 points in just 11 trading days. Then after we bottomed out at 900, the market proceeded to rally all the way back to pretty much the swing contract high is at 1338. Yesterday's high was 1336. So that was a gain of 436 points, or a difference of $48,000 a car in just 11 days, completely wiping out the entire loss. After opening up, limit up yesterday, right at contract highs, we finally caught some technical resistance on a full retracement of the market, which you know well about there, Scott. And now over to the cash market. Random Lengths print came out 12.90 yesterday, so that's where you can buy it. But I would say that's pretty accurate to reality. They kind of been misreporting, I would say, for the past couple months, but that's pretty close today. The biggest issue we continue to face, though, Scott, is product to market. The mills have massive lists of unsold inventory, but with the truck convoy and everything else going on in Canada, this is our 5th year of shipping issues up there. So the Canadian railways and trucks are just not moving. So the mills have all the lumber you would want to buy, but they just can't get it to you. So that's why you see this big snapback in the board, that 400-point rally. It's, there's no point in being excited about the market if you can't get the lumber. So this is a big issue, and we're hopefully in the spring we get some of this cleared up and get back to normal trading, because if we see that situation ease up, you might have a wall of lumber coming at this market, which obviously would be bearish, and it would be opportunity for all these permits to finally get in here. Right. I still advise caution. I think the best way for protection in this market, in this wild massive range market, would be to do options, buy puts for downside protection, buy calls for your upside needs, and, kind of don't diddle in the middle. You almost got to wait for it to be oversold or overbought to operate, right, because it's so thin, right? All right. And I still say the market is untradeable for speculators. Okay. I mean, it really is.
Yeah, it's dangerous. You're right. It's absolutely dangerous. Well, that was a veritable wealth of knowledge there. Thank you very much to Robin Cross from StoneX with the lumber market. We're going to go away, pay some bills. We'll be right back after this.